Hello, everybody. It's Crypto Caesar, 13th of November, about 4:30 now in London. Hope in the afternoon. Hope you're all well. Usual warning. This isn't financial advice. Cryptocurrencies are very volatile. Please only invest what you can afford to lose. Okay, let's start. So we've had a lot of worry, a lot of anger, a lot of pain going on. FTX, has caused a bit of a capitulation or a capitulative event. A lot of people are very angry, and a lot of people are hurt, and a lot of people are giving up now on crypto. Okay, and it's all pretty shit, but you know what? That's what happens in any type of asset cycle. Okay, you get the opposite at the tops where people are absolutely bullish and everyone's calling 500k Bitcoin like they were in summer 2021. But now equally, when we're in these lows, people start being unreasonable with the downside prices as well. So, this is all just part of the bottoming process. And if this is your first bear market, then you'll learn a lot during this process, and trust me, it's not going to be a short process. It's going to be a long process, and I've been saying this for a long time anyway. I don't think we will see a Bitcoin all-time high again until excuse me, at least the end of 2024, the beginning of 2025. Those of you listen to my videos on a weekly basis know why, and it's all to do with the 4-year cycle of Bitcoin and the halving event, which happens every 210,000 blocks, or essentially it's pretty much every 4 years or so. But anyway, we'll come on to that in a moment, but let's look at what's going on at the moment. I'm looking at the weekly chart on Coinbase. At the moment, a lot of spot Bitcoin gets bought on Coinbase. And it's interesting to look at the volume there. So let's start with something positive, and then we'll go into the realities in a moment. So the bullish indicators to me are sitting right in front of our faces, and firstly, that is the volume. This really high volume here is a really good sign of a bottoming process. Okay, it could even be saying the bottom's in, but I'm not sure about that, and I'll explain to you why in a moment. But essentially, this large spike in volume here is a very good indication that the bottom is definitely coming close, because when you have these really big spikes of volumes, that means that sellers become exhausted, and there is no more downside to go. That doesn't mean there won't be any more downside in the coming weeks, but this is really, really positive, because if you look at how high this capitulative volume is, it's really high. Let's mark it out on a trend line. See how high that is. It's higher than the coronavirus capitulating volume. Of course, on each exchange it's going to be different, and it might be worth looking at the aggregate volume, but I think the aggregate volume is pretty high. But Coinbase is usually a good indicator for spot and buying and selling of Bitcoin. So not as high as the COVID low, and not as high as the last bottom, but of course, there was less market cap on Bitcoin, than less being traded, but still, this is something that we want to see, and that's quite positive, and in my view, that's quite bullish. So the second bullish sign for us is that we have a potential into a line bullish divergence. So we've got a lower low in price, so the price is going down, okay, but looking on the RSI, we have a higher low. Okay, so that is essentially an indication that we have a bullish divergence playing out. Okay, I mean, we need obviously for this the RSI to hold this trend line here, and then we make a move up. if it breaks down through, then it's not a bullish divergence and it's invalidated. But essentially, when you have a lower low in price, okay, and a higher low on the RSI, that is what we call a bullish divergence, which is bullish, and it suggests a potential trend reversal. And that's on the weekly, and it's one of the biggest, bullish divergences we've had in the history of Bitcoin. So it's pretty good on the weekly chart. It's looking pretty good, so that's bullish. Now let's look at the reality of things. Okay, the reality is that we have now broken down below this support area of around about basically 18k, and if we can't get ourselves back up above this line of support, then essentially that support has now become resistance. So if we can't get ourselves above that, the chances of us going lower are extremely high. And we're coming towards the end of the week now, and we haven't been able to do that. So I think we have to resign ourselves to the fact, or the strong possibility, that we are going to go some lower here. We're going to see some lower price action. How low we go, I do not know, but all we can do is look at the ranges, okay, and the levels. So the first level, if we're going to drop down any further, the first level is around about 14k, okay, and that comes from this high, this really big rejection that we had when we rallied out of the bottom in the summer of 2019. We rallied up, and then we heavily rejected off it, and then we came down. Okay, so that's where that level comes from. It's about 14k. The next level is about, I would say, kind of 12k-ish. This level here, so it's about 11.6 or so. This level here, so where we rejected in the first, in the bull market 2017, we came up, made the high, came down, and then we came up, and we rejected heavily there. Probably the B and the ABC correction and the Elliott wave. I'm not an expert in Elliott wave, but I'm sure Woss will tell me if I'm right or wrong. But that would be the next level. Essentially, it's around 12k, and this is my range, as it always has been. Below 18, 19k, all the way down to here. Now there is another level after that, which I know a lot of people are looking at, that I talk to on Twitter, and it's around about 10k or so. It's 10k because it was this level of rejection here, so it's become a level of support now because we're above it. Back in April 2018, another rejection there, so it suggests that this will be support. 28th of October 2019, 17th of February 2020, and May 20. So this is an area here. So essentially this entire area at the moment is up for grabs. Okay, I'm not sure how deep we'll go into it. It may well be that we might penetrate through it. Okay, but I mean, I don't think that will happen. But if it does happen, I'm willing to take the pain. I'm willing to take the pain on it. But my view is that I think that is unlikely from a probability point of view. But this is the kind of range we're looking at now. Because if we can't get above this area of 18k, there's a strong likelihood, probability wise, that we are going to visit the next level, which is at 14k. If we can't hold that level and we don't start grinding out a bottom there, then the next one is about 12k. And then if we can't, grind out and find a bottom there, then the next one is 10k. Okay, so those are the levels. That's the way I see it. And, this is a decent area for, dollar cost averaging in. Obviously, I already have a position. I picked up a little bit more. I picked up some the other night, about 16k on the nose. But I'm still only about 55% still also exposed, and just waiting to see whether we test these nether regions. So it'll be interesting to see what happens over the next few weeks. But my view is if we can't get back above 18k pretty quickly, I mean, we're going to have a weekly candle close below it at the moment, it would seem, because it's a long way up. because we're trading at 16.6. So the likelihood is that we are going to visit these lower regions. And of course, we've got the traditional markets opening tomorrow, and I think there's going to be a little bit of annoyance from traditional investors as well around the crypto space. So they might be pulling capital from certain funds that are linked to crypto and so on and so forth. So let's just see what happens. But we've got Block FI as well. We don't know what's going on crypto.com. I think that might be FUD, but anyway. So there is room for further capitulation, and I think that will likely happen pretty soon. From a 4-year cycle point of view, as you all well know, the 4-year cycle, so 208 weeks, would be pretty much, I think it's like the 10th of December or something like that. That's yeah, so but it's about between the 5th and the 10th of December or thereabouts. So we're not far off the 4 years. And as we know, cycles can, they can bottom early or they can bottom late. Bitcoin's never bottomed after 4 years. It's bottomed a few weeks early, prior to the 208 bar mark. Essentially, it's I think it's previously come in at 205 bars as a bottom and 208 bars. So it's never bottomed late, but it could do given the situation going on. But what's very interesting about this, though, is that we are, in my view, definitely on our way now down to the bottom. And this capitulating event started essentially around about the 7th of November, maybe a few days after that, about the 9th or 10th, was it? And the final descent into 3K back in 2018 started around about the 14th of November. So it was literally just a few days apart from the November 2018 descent into 3K, into the bottom. So the 4-year cycle, to me, this is either just absolute coincidence every time, or this actually might be a decent method and analogy that we should take into account. In my view, I am taking this into account. I'm not putting all my eggs in the 4-year cycle basket, but certainly so far it seems that Bitcoin is working in this cycle, and everything in life works through a cycle. And there's no suggestion to me that the 4-year cycle is broken. I mean, if we go into sort of January, February time, and Bitcoin is still making lower lows, then I think I'm going to have to accept at that point that the 4-year cycle is broken. Okay, and therefore, it's invalidated. But so far, so good. It seems to be working like clockwork. We'll have a look at the 4-year cycle a bit more in a moment, but essentially these are the levels, back to the levels. So back to what we were talking about a moment ago, 18K. We need to get above 18K. We need to do that quickly. The chances are we're not going to do it tonight, so that would mean a weekly candle close below 18K, which is bearish, which means we've lost this level here, and there's a high probability now we're going to test these next levels down here. The first level is 14K. The second level is about 12K, and the level below that is 10K. We could pierce through all of them, who knows? But my view is that the likelihood is that we don't pierce through all of these. If we were to do a traditional 84% drawdown, like Bitcoin always has in previous cycles, we would essentially be looking at about 11K. Yeah, 10.9K, 11K or so. All right, that's where the 84% traditional drawdown comes. So if we get a candle body going into 11K, 84.65%, which is pretty much the pullbacks of every Bitcoin cycle so far, that to me will be a decent area to be looking to buy some Bitcoin, maybe a little bit above it. So thinking about it, if you're a long-term believer in Bitcoin and you're willing to hold now for 2 or 3 years, then between sort of 14K and 11K might be a nice little area to get some decent nibbles away at some spot Bitcoin there. Okay, so let's look at Bitcoin in a bit of a zoomed out fashion. So once we find our bottom, I would not expect to see a V-shaped recovery, okay, like we did have here during COVID. The reason why I don't think that we will have a V-shaped recovery is because this V-shaped recovery was during COVID, and of course there was a huge global injection of US dollars into the market space at a super high rate, okay, really quickly injected trillions of dollars into the market. And that's not going to happen again. I don't think very soon, because we have a problem with the amount of dollars there are circulating. But this happened because of that massive injection of liquidity. Every other Bitcoin bottom, okay, has flattened out and carved out. I mean, this is generally what you see, you know, with bottoms in most assets. You see, you know, it just carving a nice bottom out here, rounded bottom, just rounding out. Okay, and that is likely, in my view, to happen again. So you know, you kind of get this rounded bottom again in 2019. You know, we got this rounded bottom. It just rounds itself out and it comes back up. Okay, and I think that's what will happen again. Okay, so don't expect when we find our low for us to be getting out of there really quickly, because the likelihood is that we are going to languish there for some months before we get out of it. And that will cause further pain, further stress. It will cause retail investors to fold. It might cause some further capitulation within companies involved in crypto. That's what happens in bottoms. You know, you very, very rarely, excuse me, get a V-shaped recovery, particularly with Bitcoin. It's just rounded out, takes a long time. Okay, the bottom in 2015 into 16 was in, I mean, didn't break out, did it, for 39 weeks. Okay, it's quite a long time to spend down there, you know, and that is a lot of pain for people. Okay, a lot of pain about that. 19 weeks. So, you know, so expect to be languishing there for some time. Okay, what seems to be evident from the past bottoms is that they are shorter in length. Okay, but still 19 weeks is still, you know, more than 3 months. So it's a 4 months or so. So it's a quite a long time to spend languishing down there in the bottom. So once we bottom out, we're going to languish there for a bit. That's my view. Okay, let's say, for example, you know, for argument's sake, we bottom out at 12K. Okay, so we make our bottom around December time. The chances are is that we're going to probably languish there until kind of March time. Okay, and then we'll probably start finding our way out of it. Okay, and my view is that I think, excuse me, if Bitcoin does bottom out and start grinding up out of there, then the likelihood, in my view, is that we're going to see a similar structure as to the last Bitcoin move back in 2019. So essentially, we'll probably start to attack the higher regions of around about here, maybe like 46, 50K, this kind of region here. Because in 2019 we came right up and got up to, you know, 14K, which wasn't far off the all-time high of 20K, and then we pulled right back. Further pain, went sideways. Obviously there was this outlier into COVID and then into the next halving. So let's mark the next halving out as well, because that's important. So that's going to be, I mean, I haven't looked at the Bitcoin countdown clock lately, but the last time I looked at it was about the 18th of March or so. So essentially, let's say we bottom out come December, then we languish for some time. So we bottom out, we get ourselves down to 12K, so for argument's sake, and we languish there for a bit like this. Okay, ding, ding, ding. Everyone is feeling the pain here. They're thinking, oh no, 4K is coming, 4K is coming. Everyone's saying, I told you, we're going to go and test those COVID lows again. We're going to test those COVID lows again. And everyone's going to be feeling, you know, really, really on edge and anxious and so on and so forth. And then it'll rise up, break through the 20K mark, and then either test this area up here of about 31K and reject, and then come down to 20K, going to the halving like that, or it'll go up to about 46, 50K, then come down to about 30K and go sideways into the halving. Okay, I'm not saying this is exactly what's going to happen, but if it follows this sort of structure, that's the likelihood of what will happen. Okay, and then Bitcoin will finally break its all-time high at some point after the halving in end of 2024, beginning 2025, make its all-time high, and then we'll have another cycle again, you know, and rinse, repeat. And until Bitcoin has a market cap of, you know, 10 trillion or so, I think these cycles will continue like this, these boom and bust cycles for some time. And even when it has this huge market cap, which I do believe it will have at some point in the future, it's still going to follow cycles, just like gold follows cycles. What, you know, look at the gold chart, look at the silver chart. They follow cycles, all right? So my view is that, you know, even though we've got all this, you know, crap going on and all this really lots of FUD as well, and lots of despair and anger and stuff, my view was that, you know, we were never going to print an all-time high until the end of 2024, 2025 anyway, you know. So to be honest, this just fits into the timeline of the 4-year cycle. And last time we had similar type of really bad news in relation to miners capitulating, China banning Bitcoin, loads of massive mining corps in China were forced to shut down, and loads of things were going on. Okay, it was very, very similar to what was going on here. I mean, we had the Bitfinex saga as well then. You know, I mean, it wasn't around the low point, but still, it was that year, and you know, similar things happen. You know, it's just a carousel. All right, we need really, really bad news for there to be a capitulating event, and that's what's happened. Okay, but I can guarantee you that as the months go past, as the years go past, when we start rallying up towards the next halving in March 2024 or wherever it might be, everyone would have forgotten about this disaster that happened the other day with FTX. The risk will be on. People will be aping into shit coins that they don't even know what, you know, what they do, and they don't do anything anyway, just because they've got a nice picture, they're buying it. You know, that will be what's happening. And you know, the risk will be on, because that's what happens. This is just a cycle of greed. It's a cycle of greed, guys. Okay, I've been doing this a long time, and I'm telling you now, it's just a cycle of greed. Boom and bust, boom and bust. That's what happens. All right, but you know, the upside potential in Bitcoin and other cryptocurrencies is massively higher, because they're so, you know, it's a nascent asset, isn't it? So the upside is huge, and that's why we play this game. All right, and of course, because we believe in Bitcoin as well, and we believe that the fiat system is fucked, quite frankly. But anyway, all right, this is what I see, and let's look at it on the old chart that we know of. We know that these 4-year cycles happen, you know, boom, bust, boom, bust, boom, bust. Okay, and I can guarantee you, it's not the end of Bitcoin. It's not the end of crypto, because we will have another boom again. Okay, and that boom, if you know, if the 3618 is correct, because it was correct on this time, it was correct here, it was correct here. You know, if it's correct again, you know, you're talking of $230,000, $240,000 Bitcoin, and that would actually be a diminished return from the last move up with Bitcoin. Do I think it's going to go that high? I don't think it's going to go that high unless we get massive, massive institutional buying of Bitcoin, which is quite possible because David Mercer at IMAX Global is kind of saying that he reckons, and he is, he knows what he's talking about. He's a guy that you should listen to when he talks. He is saying that he feels as though regulation is going to come in 2024, he thinks, for big institutional investors, banks, etc., to be able to invest in Bitcoin and self-custody Bitcoin. And lo and behold, that's when the next halving is. So if there is this huge, massive institutional interest in Bitcoin that they can custody themselves and not have on an exchange, then there is this distinct possibility that we could go that high. All right. But I don't really like moon boy targets. You know me, I'm very conservative. But what I can say is this, is that there will be another all-time high. Okay. It's going to take a while. We knew that anyway. My view is the all-time high comes end of March 2024, beginning of 2025. So if you can pick up, like I'm trying to, some decently cheap Bitcoin in these lows, then the upside reward is pretty good. All right, it's a pretty good investment if you ask me. So don't worry, hang in there. You know, these times are difficult. I know some of you, this is your first bear market, but you know, you're going to learn a lot from this. And what you do in bear markets is you get your head down, you educate yourself, you learn, you accumulate, okay, and you get yourself decently positioned for the next run, for the next boom. And there will be another boom. Okay, everybody felt like this back in 2018, 2019. It's probably going to get worse. Okay, it's probably going to get worse. It's probably going to be something else that happens, but that's just the nature of cycles. Okay, and as I said, when we do find this bottom, expect to languish there for a good few months. Okay, and hang off a cliff like we did in all other previous cycles. All right, but there is light at the end of the tunnel, and it's the positions that we take now in the next, weeks and months that will echo in eternity. Thank you very much. Speak to you soon.